All right, welcome back, everybody. Happy Sunday. I just wanted to hop on here, do a quick update, kind of give an update on the portfolio, some trades I've made, some adjustments I've made to automation, and my plan to basically try and pay my rent with some automated option strategies. So, if you don't know who I am, I'm Ben Collins, CFA charter holder, Chief Investment Officer of Options Autopilot, which is an automated options trading platform. If you want some more info on that, check the description and I'll kind of cover some things just in general and how I've changed some of my settings. Because my goal is now to kind of try and generate enough to pay my rent as just an example. Totally automated from Options Autopilot. So I'm going to go over kind of current position, what's changed, what's not. I guess first things first, we can kind of see here that I've gotten rid of all my ES positions on the S&P 500. So I kind of did that when the market was pulling back, because if you recall, I was leaning short. If you haven't watched those videos, you can go back and watch. If you appreciate the transparency, like and subscribe for the longer term stuff. But basically, I had ES positions on. They were manual. They were not automated at this point. I have in the past, and I was switching over to using MES exclusively. So I basically decided to close down the ES positions. And one of the reasons, just because I want to kind of give my thought process around this stuff, is kind of my effective short Vega was pretty high. It's kind of high now because I've had a couple positions go on MES in the past, but I was short about, I don't know, 150 Vega on ES as well. So even if I would have made some money on leaning short Delta with the ES position, I still could have potentially gotten hurt if we had a volatility spike. So in the interest of freeing up some buying power usage and just kind of making it clean moving forward, I decided to kind of close that down and start to implement what my plan is on generating enough money each month for rent, which is effectively $3,000. Just as an example, I thought this would kind of be a real world and helpful use case to kind of show. And again, this is my own money, or part of it, I guess. Don't do what I'm doing. Just use this as educational purposes, but maybe just the takeaway is more of not exactly what I'm doing, but the concepts and maybe the risk management behind it and how I'm approaching it. Obviously, this is all helpful and built in with Options Autopilot, but this is kind of just how I'm approaching it in general. A little quick update: SoFi closed down the short puts. They had earnings, it popped and then kind of sold off. But I did close down all my short puts, some of them before earnings, just because I had gotten a decent amount of the premium. One of them, I think, was like 60%. So I figured, okay, why not, free that up. Interesting thing is, do this line a while ago. It does kind of seem like, came up, tested this diagonal line, and so far has been rejected. I think I still am positive on SoFi in general, and I think that this trend is going to continue. But I don't know what the good news catalyst will be. Kind of keep pushing it up, so it could just kind of tread water for a bit. But my idea is if it pulls back a bit more, I might actually uncover my call spread a little bit, or I might go back to just being long calls. Again, you can go back to see how this position has evolved over time, but this is probably the most I've been up on SoFi at any given time, because I did go and close down some of these short puts. I guess you can kind of see, yeah, so these are the last remaining short puts that I closed after earnings. I only had 10 contracts short still, so that was a good win. I think I had sold them at $1, bought them back at 36 cents. So about a 70% profit on that. And I closed some other stuff before that, just in terms of, risk management. So, SoFi still working, still kind of wait and see. That's, again, those are manual kind of speculative positions. In general on Intel, that's actually been up higher. This always gets skewed. That's the annoying thing about using long-term, leap call spreads or just calls in general, because the bid ask widens out so much, and then it kind of just gives you these phantom profit and losses depending on how it is. So I'm definitely up, but I'm not up this much on Intel. If we look at this, I think I had converted to a call spread around $35 maybe. Maybe 35, because then it started to move up. Yeah, maybe it was 32. So I mean, it's definitely moved in my favor, but I haven't had as much benefit as if I would just been long the calls like I was. But again, it's supposed to be long term. I'm just trying to take what I had made and then now hopefully triple that. So I effectively have no risk and I can hopefully triple my money over the long term, but that will just take time for it to unfold. Similar to SoFi, I think if it pulls back enough, I might end up going back to just long calls. If we look at this, I mean, volatility has come in both on SoFi and on Intel. So, if volatility continues to drop and it pulls back to maybe an attractive level, I might go similar style of selling some puts on Intel, more short dated, not long, and then buying these long-term leaps. That's kind of my thought process there. It's I'm basically expressing long positions on things I think are favorable, but I have enough profit. I'm probably for sure up. I would assume I'm up at least $600 to $800 on this technically. So it's obviously not as much as this, but I'm down a little bit, I think, from where I was at the peak just on my calls, just because I did a couple other things. But Rivian's hanging in there. I haven't cut it yet. I'm still technically up a little bit year to date. The idea is if it breaks below 1250, I'm going to fully close it out. So far, it's still hanging on to this diagonal trend line. I mean, if it can start moving again and gets above here, I will add back to my position. I had closed down part of it, but I will close this out if it breaks below 1250 is kind of my line in the sand. So far, it hasn't. So we will see what happens. In terms of the automated strategies, obviously I just have crude oil going at the moment. This only has one open. I don't necessarily have any opinion on oil, right? I'm just kind of trying to harvest the volatility premium using the 1-1-1 strategy, automated. So it's just putting it on regardless. I think I've had, a few profits, few losses. It just keeps running. Bonds, I believe I actually increased my number of positions, definitely to at least 2, maybe 3, but I'm just letting that go. And it's just kind of moving around and doing what it does. I'm trying to think of if I think I had a profit take last week on, yeah. So basically, that was the opening. I'm trying to go through this quick. So my SoFi. Oh yeah. So crude oil. This was a profit take, automatic, and it was pretty quick. It had put it on, I think, earlier in the week, and then it maybe closed later in the week just because oil started to move up. I don't know if it was on positive news or something that Trump was saying, but so that's just continuing. Same thing with bonds. They've kind of yields have actually moved up higher. I don't think it's going to go crazy higher. I think it's probably stuck in a range, but you can see that it's pulled back from that trend. Sometimes it's easier to see it with TLT. So this gives us a little bit better kind of idea of longer term trends. But I mean, in my opinion, this is kind of showing a bottom right there. So my hope is that this is the start of a new uptrend, but you just never know, right? Again, I'm just trying to harvest the volatility premium by doing the 1-1-1 strategy on the bond futures. That's kind of the benefit of using the margin and the leverage there to earn a better return. Bitcoin's an interesting one. I feel like it's not necessarily looking that positive. Again, I'm still positive long term. I'm not a bull on crypto. I'm not a hater. I see the utility in the concept, and obviously I think that tailwind is there with administration pushing it. in my opinion, and just it becoming more mass adopted. But we can kind of see, interestingly enough, it's not necessarily getting a bid as much right here. So it kind of looks like it's actually topping out in the short term. I'm not saying it's only going down from here. You can kind of see that this, if we draw this, is kind of still intact here. This kind of diagonal trend line. From a technical perspective, but this type of action and the fact that I think it actually got close to breaking down. My computer's lagging here. Yeah, so basically I would kind of argue that this has broken down, but it doesn't seem to be immediately just selling off. My guess is we get some profit taking into the year end. I doubt that Bitcoin. No, it doesn't matter. I was gonna say, I doubt Bitcoin goes below 100,000. I think that's kind of a psychological point in the sand. But if it does, you might get some forced selling in general. I don't know the exact dollar value. I think the only thing I would say keep in mind from a Bitcoin perspective is, people who are doing things like Michael Saylor and strategy. I think that he kind of does have an average cost that he's buying at. I don't know if there would ever be a point in how he's structuring these things that, let's say, it breaks below a certain level. Does he get some type of collateral call? That I don't know. That would be my only kind of, not a black swan thing, but something I could think of that would be maybe unexpected that would force a lot of people and maybe force selling of Bitcoin in general. But I don't know if I think maybe hopefully he's smart enough to have avoided that potential scenario. But given that he's using some leverage, from my understanding, that can happen. Or maybe there are funds, right, that are levered long, and if they end up getting kind of shaken out, or if people start to sell, it could kind of build on itself. In my opinion, that would potentially be a good buying opportunity. But I'm still just doing the put spread, just automatic. Right now, I'm doing this. This is basically all I have on. I guess I have 3 positions on at the moment. Just the put credit spreads for Bitcoin. I still haven't done anything with gold. It did finally pull back. Let's just look at GLD actually. So it's a little bit easier. I mean, it was kind of going parabolic here. Now it's kind of pulled back a little bit. I think it could pull back a little bit more, but there still seems to be quite a bit of demand there. It could be kind of the de-dollarization in general. So, Bitcoin, a little bit of Bitcoin and gold exposure, maybe not a terrible idea. But again, I'm just only looking at it from a harvesting income perspective from the option side. But if it was just an asset allocation perspective, I don't see an issue of having a certain allocation. But you never want to go crazy, right? It always sounds good in hindsight. We're like, oh, gold's up 40%. Oh, I should have had more, but that's just how it goes. You maybe just want a static or at least a decent allocation to these types of assets, if that makes sense for you. But yeah, I haven't turned the gold automation back on at all. But I might if it starts to pull back a little bit more, and I'm probably going to do a broken wing butterfly automation like I kind of had talked about in the past. So stay tuned if you want that. Subscribe. I will update when I make that decision. If we go into options autopilot, we can kind of see I've kind of taken money out of this account down to a level where, I mean, again, I can put some money back in here, but I kind of want to just, as a challenge, work with more limited capital and then say, I'm going to generate, $3,000. I don't recommend this. This is like too levered in general. I really would only recommend trying to generate, money using at most 50%, and that 50% should be at times where it's VIX is very high. So you typically want to be trading more like 25 to 35% because you want a cushion for if VIX spikes. So definitely don't do what I'm doing. I'm just doing this kind of as an example here for options autopilot and just for myself. So I'll walk through kind of how I've changed. I was just doing some ES 111s. I'm still using the 111s. You can see these are the automations I currently have on. I have increased my contracts per position here. For example, this is one of the ones that I'm doing. So I'm only running 4 automations 4 days a week now. I'll probably add in a fifth, but right now I just kind of wanted to leg into it a little more. Again, it's about risk management, long term, not like short term, win rates in general. So right now, this is the last one that went on. You can see that my potential profit is $233. That's because I've increased it to 3 contracts. So it's technically a 333, but it's just the 1-on-1 times 3. But technically, that's still less capital required than an ES. And that's kind of why I'm doing this. Upped my allocations to $5,000 each automation. So as of right now, I'm at max allocating $20,000. If I add another one, it would be $25,000. So that's kind of what I'm working with. And I basically, so if you look at this, theoretically, once some of these other ones roll off, because you can see before I made this change, my profit target was $94, so basically 100. And I basically am not going to get to $3,000 a month, obviously, just doing it 100. I mean, I could. I would just have to increase what I'm doing, but I just figured it made sense. So you can see how easy this is. Basically, I'm just, all I did was increase my quantity here to 3. And this is currently only running on Friday. This is the 90 DTE 1-on-1. So in general, I also added the 100-day DTE 1-on-1. That is also going to be 3 contracts. That's going to go on Mondays. Again, this is kind of a random decision. I just didn't change it. I could have easily changed it and made this, Thursday or whatever. But as of right now, I only have this 100, 75, and 90, but I have them running a little bit addition. On 75, actually am only doing, I believe, 2 contracts at the moment. Yeah, so basically I'm only doing 2 contracts, but I still am allocating $5,000 there. So the reasoning there is I can earn more premium, of course, the farther I go out, and then it also takes less capital. That's just how it seems to work with, or how it does work with the futures options span margin. So it's better for me to earn a higher return because my risk adjusted return and my return on my margin is going to be higher when I do that. That's why I added the 100-day. I might even add a 120-day 1-on-1 and go up to 3 contracts. If I really wanted to push it, I could go to 4, but I really don't want to. The reason I don't is, again, I'm thinking about it from a risk management perspective. I don't want to have some massive drawdown. You could see overall, oh, you can't see, I guess. Let me show you this. Overall, year to date, I'm up 30. Again, this is a little skewed. Just take it with a grain of salt because of bid-ask spreads. But roughly, I'm up $31-ish thousand, or 32, depending on what time you're looking at it in general. So what I'm trying to do is now take that profit and just use that to be kind of not static, because I'll increase it again, but just as an example to show, you take that, and if you could recurring, like on a recurring basis, just generate $3,000 a month to pay rent or whatever it is. I think that's pretty impressive, very helpful, very practically helpful. And also, but I don't want to give this up, right? So at any given time, I just have to assume that maybe something happens that there could be a drawdown. Similar to tariffs, again, you always want to, the market does go up in general, but you want to be aware of what can happen. And that's why I switched to MES to do more frequency, but smaller positions, because then I'm not hurt as much if there is a pullback, right? So if we go worst case scenario, I guess I shouldn't say worst case, that's impossible to sort of say, but in general, since we've gone through tariffs, we've gone through a bunch of stuff, and the system has been running since May of 2024. So it's gone through these iterations, and we've been through tariffs. And basically, if you just let it keep running, you're totally fine, right? But you need to manage risk in the meantime. You don't want to blow yourself up. So my assumption is like at any given time, if all these could go to my stop loss, 649, theoretically, they're not all going to be this big, right? But if we just say it's $500 on average, and I'm going to have on max 20 positions open, like theoretically I could have a $10,000 drawdown, right? That would be super annoying and a bummer. The benefit of the one-on-one is I'm assuming if that did happen, some of them would end up in a bear trap and actually would earn back some of that money. But yeah, you can go and watch some of the other ones. I've talked about that, and that's why I'm kind of using this one-on-one strategy, why I like it so much. But in general, am I okay with a $10,000 drawdown? Yes. Would it be annoying? Yes, right? It'd be very annoying, giving up a third of the profit that you made, especially if it happens in the year end. But in general, if I can just keep building this up and let's say a couple months go by where I can generate that $3,000 a month before we have any kind of drawdown, because again, this is average. This is not going to be every single month, right? Not any strategy really makes money 100% of the time. But if at least you can get a couple months under your belt making some profit, then it's helpful for any kind of future drawdown. So I'm just kind of approaching it that way where, any individual position can't necessarily, blow me up or hurt me. Would it be annoying to see that setback? Yes, but it's all about the long-term, vision, plan, and just earning this. Because, for example, if the idea theoretically and the benefit of the automation is, let's say I was incapacitated or died and I just had this running for an infinite amount of time, it should make quite a bit of money. If it's not shut off, it should make a lot of money, especially if you're doing it, with a decent amount of capital across multiple positions like I am in multiple asset classes. Because the whole point is that we're exploiting the structural inefficiency of options, and long term they are overpriced. That's our assumption. That's how it is. That's just how insurance works. As long as you can manage risk. So that's the key here. So that's pretty much my plan. And I guess I do want to highlight that is one of the reasons I haven't necessarily fully had us focus on doing zero DTE strategies. We still will do it. Zach hasn't allocated the time yet, but it's also because if you do it this way and you kind of leg into these positions, this effectively becomes almost like a zero DTE strategy because you'll have so many positions on, it'll start to roll off on a daily basis. So effectively, you end up having a zero DTE strategy because all these will be staggered across the weeks, across the days and months, and then it starts to kind of roll off in succession. So that's the idea. That's kind of how I've seen it. That's what other users have seen. It's just more of kind of showing it in reality and having to be a practical kind of application in terms of being able to take this. And in my opinion, if you can take 42,000, again, I don't recommend this for anyone. I would have it be on a larger amount of money, but just to prove the point that this would be possible. And then maybe you just set aside that allocation to hopefully help pay for certain expenses or one type of expense. And then it helps free up your time and maybe gives you the ability to do a lot of other things you want to do or quit a job or whatever. It takes pressure off of your day-to-day life is kind of the whole idea and the whole reason that I wanted to create this in general. So that is pretty much it. Any kind of new positions? I haven't added any yet. I kind of am kicking myself. I did look at Reddit and wanted to do something, but I haven't yet, and I probably should have because it did pop and then sell off, so that's a little concerning. But I do think it's probably the long-term trend is higher. It's just a matter of how to leg into this. So stay tuned for that, and probably a couple other positions I might consider. Chipotle has gotten beat up quite a bit. Still think people are going to eat there, but you just got to be cautious on what you're doing. So that is it for now. That's how I'm planning to try and hopefully generate 3,000 a month on this capital. Again, you could say it's for whatever. I'm just using the example of rent, and because I think, if you can pay for housing with something like options autopilot, like I said, whole point is to reduce stress, free up your time, or free up your ability to maybe say no to things, leave a job, whatever it is. So if you have your basic housing covered by something like this that gives you time to figure something out, that's kind of what I'm wanting to show and ultimately have happen. So that is my plan there. I guess stay tuned, subscribe to see the results, because I will show it to you either way, whether it works out or maybe we get a bad announcement and the market pulls back into the year end. But again, the idea and concept is just to do it no matter what, and that should work out in the long run. And that is my plan. So appreciate everyone watching. Don't forget to check out Options Autopilot and subscribe, and we will see you in the next one. Have a good week.